Well, hello, everyone. This is Peter Grandich again. As always, I remind you this is not to be considered investment advice. You should always speak to a licensed financial advisor before making any investment decision and to read my disclosures on the bottom of my page. This is a little bit different. This is now the second one I'm doing because I have recognized it took a few years. There was a period of time when I was a legend in my own mind and thought what a gift it was for people to interview me. But what I've concluded is what a gift it is to be interviewed. And someone that's interviewed me quite often and has been kind enough to also interview my partner and I is Steve Barton. Steve, thank you for joining me today.
Well, thank you for having me on the show, Peter. This is
Now,
fun.
you were already preparing like you were interviewing me again. So we were remembering now the roles are reversed now for
Yes.
today, okay? So let me start by asking, where are you actually located?
I'm in California. I'm about an hour and a half north of LA.
Okay, well, better you than me. And not that New Jersey is much different, but the People's Republic of California, I may or may never step in it again. But
I call it the communist state of California, but yeah.
okay. So what I like to do before we get into markets and all is just give us your background. You probably don't get a chance to do that when you're interviewing others. So please take your time. Tell us a little bit about your background. How did you end up doing this, and why do you do this?
Yeah, I started going back as a kid. I was always fascinated by games, especially card games, and I'm actually really good at Magic because I got so good with cards. But I remember as a kid sitting around the table playing cards with my family for penny ante poker, and I realized pretty early on through stories of my grandfather that you can actually make money doing this. And so I started studying the game. I started studying blackjack, and I realized that there were opportunities that came up in these card games where you were a huge favorite or you were a huge dog. And you can vary the amount of your bets depending on whether you're a favorite or not. So for a simple example like blackjack, if you've got where the dealer is showing a six and you look down at two eights, you can split those and now double your bet, and you have a very good chance of winning more money than you're putting in. And so that fascination got me to start going out to Vegas pretty early and playing blackjack. And most of the time you're just making those minimum $5 bets, but then all of a sudden a positive scenario comes up where you're a huge favorite and you can vary that bet and make it bigger, right? When you're counting cards. And then they changed the rules of blackjack and they took away surrender. And that no longer made it profitable for me. And on top of that, they stopped doing single deck blackjack and now they got a shoe of 6 decks and they cut it about half in the middle. So counting cards is completely pointless. And that's when Chris Moneymaker won the World Series of Poker in 2003. And I started playing poker instead of blackjack. And I realized, like, wow, there's much more potential for making money with this game than there ever was with blackjack. And so I started studying that exclusively. And it took me about 4 years to become a winning player. But once I did, then I never had a losing year after that. And I still don't. And then I found investing through stocks.
I want to make a note.
Yeah.
Don't ever play cards with Steve Barton. Okay, go ahead. Go ahead.
It's a fun game. It incorporates so many different aspects, the math, the percentages, human dynamics, psychology, body language, reading people, and my strength in the game is pattern recognition, so I can recall from, years prior playing with a guy that I'd only ever played with once, but recalling exactly how he put his chips in the table. And, he put them in just like now that he did back then. And he was bluffing back then. I think he's bluffing now. And more often than not, I was right. I actually took notes of how often that gut feeling was correct. And it was 64% over several years. And it was a fascinating game. But after that, I've always been in charge of my own retirement portfolio. And to be honest, for the first 15 years or so, I didn't have to do anything other than bonds and mostly the S&P 500. It just printed 8% a year. And then COVID hit and that whole paradigm shifted. And I remember calling my dad on the third, just drastic down day. And I'm like, what the heck do I do with my retirement portfolio? And he said, well, you can do the same thing I did. the dot-com bubble, put it into cash. And so that's exactly what I did. Now I was out of the market, but watching it very intently, never like I had before. And I realized that, wow, you can really like actually time this thing. And it was at that time I met my buddy Daniel, and he said that he met a trader, and he does options. And I'm like, options? What the heck are options? So we took the class with him, and that gave me a whole paradigm shift as far as like the charts and reading the charts. And you can find patterns with these, and you can treat it just like poker. You can see that this is the setup, and about 75% of the time, it works out. And I thought, man, with my ability when it comes to pattern recognition, I can take it just like I did with cards and transfer it into my own retirement account and with stocks. And I can make money like this, just like I did with poker. So that sent me down a whole nother rabbit hole. I was able to recognize pretty close to within the bottom of the S&P 500. I got back in, and then I got out about a month or two before the last top. And I haven't gotten back into that one since. But since then, I've realized that I think what we're approaching now is the bet is no longer the 60-40. The bet has become commodities. I think we're entering into a commodity super cycle. And I think the general public is completely unaware of it. I think people are just contributing to their 401ks blindly. They don't even know what they're invested in. And I think they're really going to get smashed by this next recession, and they don't even know it's coming. So I transitioned. I had a poker podcast since 2015, and I transitioned out of that. And around 2021, I moved into economics and finance. And, our whole purpose is to basically create a community of people, a hive, and we learn from each other. We interview guys like yourself, Rick Rule, Doomberg, Justin Hune, experts in the subject of commodities that we study. And it's just been an awesome learning experience. It's been a lot of fun. We've, created a network of people that learn from each other. And after every video, we put in there in the comments, different companies. So, with links to their websites and other, other guests that might come up. Before I have a guest on, every time I always throw out a little thing like, hey, this is who we're having on the show. What should we ask them? And it's just been an awesome experience. It's a lot of fun. And I'm really looking forward to, I don't want to say I'm looking forward to the recession, but I'm looking forward to the next 5 to 10 years in this cycle.
So before I ask you, I'm going to cover my face so I don't give you a tell. But obviously, you can see I played poker once or twice, but not to the level that you took it. But okay, so we kind of understand where you're at. So let's do the hard part of this. Let's look forward.
Okay.
What are your charts or whatever that you're using? What is it telling you? And is there any specific markets? I know you were bullish on uranium, and
Yes.
that could be one of them. And I don't want to steer you, but if it is, please talk about that. Not enough people talk about it. And anything else that you think is worthy that people should know about at this point.
Yeah, most of what we study is we study the S&P 500 just to see what the general public's doing. And then we also study gold, silver, uranium, copper, oil, and a little bit of platinum. I think platinum is very intriguing right now. But as far as time scale, I think uranium is probably going to hit first. The fundamentals behind that are basically, as a planet, we've got about 430 nuclear power plants across the planet, and they're consuming about 200 million pounds of this stuff a year, 200 million pounds of uranium. Well, what we're actually pulling out of the ground and mining to supply these nuclear power plants is around about 130 million pounds a year. So there's a deficit there of about 70 million pounds that has to be made up somewhere, right? So if we're consuming 200 and we're only pulling 130 out of the ground, how is it that these nuclear power plants aren't shutting down? And a lot of that has to do with they store, in the US, we store 3 years supply per power plant on site, because to shut these things down and turn them back on is not, it's not like flipping a light switch. It takes months to shut these down and months to bring them back online, right? So they have years of supply on site ready. And the ones outside the US typically have about 2 years supply sitting on site. So it's not something that's going to happen instantly, but you can see over the course of time, this is going to catch up, right? Another really bullish factor on this is that Japan has started to restart their nuclear power fleet, right? They shut them all down in 2011 when Fukushima came in and flooded the generator of that, and that nuclear power plant went under, right? After that, Japan shut down all 50 of their nuclear reactors. Well, they're going to restart 36 of them. They're up to number 13 or 14 right now. So they still have many to go. As those come back online, they have to buy more uranium to fuel them because they sold a lot of it in the last 10 years because they didn't think they were going to do this. Well, now they realize their error and they're like, oh, we got to start bringing these things back online. So they're doing that. They're doing that this year and 2024. That's going to create more demand. And where that demand is going to come from, there's a lot of uranium miners that are basically sitting on the sidelines right now. And they're like, hey, we can make a profit at $60 a pound for uranium, but the price right now is only 56. It's only got to go up another $4 a pound, and all of a sudden we can start making money, right? So as Rick Rule says, either the price of this obscure metal that nobody follows and is a very small market cap. I mean, the market cap is like 40 billion, right? And to put that into perspective, that is 1/1000th the market cap of the S&P 500. So it doesn't take a lot of money coming into this space to make a difference, right? So as Rick Rule says, either the price of this obscure metal is going to go up, or we're just not going to have electricity. And it's that simple. So I think it's more likely that the price of uranium goes up than it is that we can't run refrigerators and, and have lights in our house. That's kind of the fundamental argument of it.
So, and I'm very, very bullish on it. I have been since the low teens. And the argument here is that 10 years ago, California or a red state, you would have went to a senator and said, hey, I want to build a nuclear power plant. He would go, not in my backyard. Now you say that same senator, he said, please build one and build one soon because of how much demand there's going to be. And of course, you can't build these things overnight. The challenge, if you want to call it, is unlike any other industry, you could almost just use your fingers to count the public producing companies in the world. I mean, that you can invest in, that actually produce it and sell it to make a living. And all the rest are trying to find it or develop it. It's such a uniqueness. It's the reason for me personally, and this is not to highlight me, but why I stuck with Cameco, because I knew when institutions come in, they're going to look at that and go, listen, we can only buy producers. We really can't chase small cap juniors. And so I said, so how goes Cameco, so will the uranium market. But we're getting to the point now where there's enough interest and people are realizing the story you presented that they're going to start looking at the next producers, the people that can, in a few years, deliver to help make up this deficit. And you're right. There's no replacement. If you don't make up the deficit, we're not going to have lights on. So it is kind of, I think, of an almost certainty, if there was such a thing, unlike anything else. And that's why I said to people, if you want to just take the safest bet, just buy the companies that are buying uranium.
Yeah.
You know, in that regard. So tell me about what are there any companies that you particularly like in that area that fit your bill?
Yeah, there's several. You talked about one of the 800-pound gorillas in the room, Cameco. The other one is Kazatomprom. That one has a little more risk to it. You know, it's located in Kazakhstan. They just applied to be a part of BRICS. They're a major supplier to Russia and China. So the way our big thinkers are throwing sanctions around, it doesn't seem completely unreasonable to me that they might not extend that to Kazakhstan. I could be wrong, but you know, it's a risk. The one thing that's really nice about Kazatomprom is they kick off an unbelievable dividend, and you know, it's every quarter. They just pay. If you're in America, which probably most of your audience is, you know, you're going to have to buy it through something like Interactive Brokers, and then convert your currency, and then purchase it off a different exchange. But there is that. The number 2 producer in the world is Cameco. I believe that is a much safer bet than Kazatomprom, simply because of where it's located in the world, and the U.S. is far more friendly with Canada than they are with Kazakhstan. After that, there is a bet that you can place that's not necessarily on a miner, but you can actually buy the physical uranium itself. Now, for reasons that are pretty obvious, you're not going to want to store this under your bed, but you can treat it kind of like the Sprott Gold Trust, or a trust that stores this for you. So they have the Sprott Physical Uranium Trust, which is stored in the U.S., Canada, and I think it's France. And basically what you're doing is you're buying this yellow cake. This is the stuff before it's converted into uranium that can be fed into a power plant. But basically it's 55-gallon drums of this yellow cake, and you can buy into shares of that, essentially buying pounds, and they're storing it for you. They charge a management fee about 0.75% per year to store it. But right now that is trading at a pretty decent discount. And there's been, so in other words, uranium right now on the spot market costs about $56 a pound. You can buy it for about $50 a pound. I think that's pretty cool. And what's also cool about this is there's 2 markets to the uranium market. There's the spot market, stuff that's essentially stored. And then there's what's called the term market. And the term market is when utilities go out to these miners and they say, hey, we see inflation just like you do. We see that the price of this stuff is going to go up. We want to secure this much this year, and then we also want to secure 100,000 pounds next year and 100,000 pounds in 2025. And this miner will say, okay, we'll charge you $60 in 2023, 65 in 2024, and 70 in 2025. That's the term market, right? So there's 2 prices to this. And I found through just speaking with the experts that most of the purchases by utilities is done on the term market at a higher price than the spot market. Anywhere between 70 to 85% is done on the term market, and the price that they're doing that at is above $60 a pound, south of 70. So in that range. So on the spot market right now, it's $56 a pound. On the term market, where most of the purchases are done, is mid 60s, high 60s. But the price that you can buy it on this Sprott Physical Uranium Trust is at $50 a pound. If that's not a deal, I don't know what is. And I think that's probably the safest way to play this bet. And then going up the risk curve, but also increasing your chance of higher returns, would be companies like Cameco and Kazatomprom. Then if you want to go down the list a little bit more, one that I'm really excited about right now is Uranium Energy Corporation. And what's neat about this one is they're profitable at $60 a pound, which we're almost at in the spot market, and which we've exceeded in the term market, which is where most of their sales are going to come from. And they're also based in the United States. So politicians can throw out all these sanctions that they want, and I don't believe it's going to affect companies in America. I think as this market continues, we're going to see a premium on companies that are based in the United States and Canada and possibly Australia, and a discount in companies that are outside of that jurisdiction and maybe a little bit more friendly towards countries like Russia and China. So that's one way you can play it. If you want to go down another route as well, your listeners are probably familiar with royalty and streaming companies. Well, we have one in the uranium business. I've interviewed the CEO. His name is Scott Melby, and he's essentially started a company that is a royalty and streaming company on uranium. So they have royalties and streams on uranium miners, and they either collect the uranium, or they collect a percentage of whatever they pull out of the ground in the form of cash. And that, I think, could also be a very interesting play. I'm not really sure where to put that one on the risk. I would say it's probably maybe on par with the Uranium Energy Corporation, somewhere in that range. It's certainly not as safe as Cameco or Kazatomprom, but that could be a very interesting play as well. And that one's called Uranium Energy Corporation. So I would say, as far as risk and potential returns. That's probably the order I would go in. Physical, the two 800-pound gorillas in the room, and then the two I mentioned, Uranium Energy Corporation and Uranium Royalty Corporation.
All right, so let's talk a little bit about, before I let you go, about gold, silver, and copper. What's your thoughts on them, and anything specific there that you would like to point out?
Gold, silver, and copper, those ones I think are probably going to hit next, and maybe even in that order. Gold has held up really well. That has been pretty interesting to follow. We're knocking on the door of our all-time high. We've hit the all-time high. We'll call it 2075 3 times. And as far as on the charts, it's looking really good. I think the real what's the word? The real fuel on the fire is going to be when the Fed has paused and now they start cutting rates, right? They start making currency just a little bit cheaper. It will take more of those currency units to buy the same thing, whether it's a barrel of oil or an ounce of gold. And I think that's when gold is probably going to move to their all-time highs. So like gold a lot. The safest bet, of course, is the physical coins. After that might be a trust that you can put it in, like something like the Sprott Physical Gold Trust. After that, it would probably be the royalty and streaming plays, and then after that, the major miners. Then you start getting into the weeds with the developers and explorers. Silver, that is going to be a monumental hit. I just have absolutely no idea when. I think once we get above $30 an ounce, there's really not much resistance after that as far as looking on the technical charts. It's, I think pretty quickly after we break that 35 buck layer, I think it'll be off to the races, probably up to 50. Once we reach 50 in silver, we'll see what it looks like when we get there. But I think that's probably going to be the time to trim most of your silver miners. May not be the time to sell physical. I don't know. That'd be a personal decision, but I think that's going to be probably the time to really cut down on your equities in the silver market. Copper, that one, I think I am very bullish on copper. The one caveat I got to say is that when you look back over history and you look at recessions, copper doesn't do too well during recessions. And I think there's an overwhelmingly likely scenario that we're going into a recession. If personally, we're probably already in one right now, but I think copper over the next 5 years is going to do amazing. How it does over the next 6 to 12 to 18 months, I don't know. But I'm very bullish on copper as well. If they're going to push this green energy, if they're going to push the electrification of EVs and all this, you're not going to do it without copper. There's no cheaper way to send electricity from point A to point B than there is copper. What are you going to replace it with? Silver? No, this stuff is $4 a pound. Silver is 25 bucks an ounce. They're going to use copper. And the electrical grid system in America especially is just, it's from the Stone Age. It's got to be replaced. And you're not going to do that without copper. I like copper a lot. On top of that, their deposits, the big 800-pound gorillas in the room deposits, 50, 60 years old. They've got to find new developments. They've got to find new mines. And they got to permit the thing so we can actually mine it. I like copper a lot.
Okay, so any final words if you had to say to somebody, this is my overall assessment if you're going to be investing. It is,
I would say, if you're in a 60-40 portfolio, that is probably going to be a dumpster fire. I would seriously start looking at commodities, probably in the order of uranium, gold, copper, silver. Also, a nice place to be is in oil. I don't think we're going to stop using gasoline, diesel. There's as much as we would like to push this green narrative to third world countries, they got to come up just the way we did. They got to burn coal and they got to burn oil. I think oil is a really nice place to be. It's completely underinvested. These companies are swimming in cash. They're just they're just pushing off dividends like nobody's business. Even if the stock goes sideways, some of these things are paying 12% dividends. It's unbelievable. I really like oil a lot as well. So, if you find yourself in your retirement account, go in there, look at the thing, see what am I actually invested in. And at least what we do on our show is we focus on those commodities and pretty much those exclusively. And because I think that's where the opportunity is going to be in the next 5 to 10 years for sure.
Well, Steve, I appreciate you taking the time. I will never be playing Texas Hold'em with you. And but I will be glad to speak to you again about markets, but I'm going to watch my tells.
Okay. Yes. Thank you, Peter. This has been a lot of fun.
It's been both a pleasure and an honor to speak to you. And I'm very grateful for each and every time that you speak to me. So have a blessed day.
As am I. You do the same, sir.